Roelf VanderMerwe, and I am a director at VanderMerwe&Robertson Attorneys. And at last week's session, I mentioned that I was the director responsible for our Stellenbosch and Durbanville offices. But I need to correct this. I am now only responsible, like all of you, for my home office. I have become a home executive like all of you. Our first session started on the 30th of March, and I cannot believe that we are now hosting our 5th session this afternoon. And as my middle child, Marie, puts it, the last 5 weeks in lockdown has felt like one very long Sunday afternoon. A special word of welcome to 3 of my fellow directors, also currently managing their respective home offices, George Robertson, Eugene Groenewald, and Christel Pansegrou. Then to Theo Vorster, as our chair of our session today. Theo, welcome. Just some house rules. I think we've addressed some of them, but Theo will start the talk. And then I ask you that we're almost 50 participants, so kindly just mute your microphone. And after Theo's talk, we will first entertain questions already received, and time permitting, we will allow for further questions and comments. And we just kindly request that you state your name and the business that you represent before asking a question. And then obviously remember just to unmute your microphone. We have asked Chris Derksen, a founding member and partner of 12 Cape, with the head office in Cape Town, to introduce Theo. And we've also asked Nico de Waal. He's the CEO of PSG Alpha in Stellenbosch. Nico will have the last say today and end our session. So Chris, over to you.
Thank you. Can you hear me?
Yes, I can.
We can.
Chris.
Fantastic. So Roelf, George, and the VanderMerwe&Robertson team, on behalf of all of us, thank you. Thank you for forcing us through this discussion to consider the bigger picture. And this is especially in the context of all this uncertainty. You mentioned it earlier: asset price volatility, contradictory news flow, and the knowledge of all the immediate and extensive socioeconomic suffering which surrounds all of us. So never waste a good crisis. This was a phrase which I first heard from Stephen Kosef at the time when he was my CEO at Investec. And this phrase was apparently made famous by a guy called Rahm Emanuel. He was Bill Clinton's chief of staff by the end of his career, obviously a veteran in crisis management. And before that, it was attributed to Winston Churchill, who was also a crisis management expert without equal. And I think we know this is sensible advice. It's just not that straightforward to implement it. People are very much open to change when the equilibrium of their system is disturbed, but very few succeed, because having this clarity of thought when the chips are down is very, very difficult. So I was fortunate to participate in the very first of these discussions led by you, Theo. And this took place about a month ago. The discussion title of the first discussion was Moontlike Geleenthede. At that stage, the cumulative COVID cases was 1,350. Cumulative tests conducted was 41,000. And the call participants were 5. 31 days later, the title has gone from Moontlike Geleenthede to End Game. We've seen a 4-fold increase in the number of cases. We've seen a 5-fold increase in the number of tests. And as we just heard, a tenfold increase in the number of discussion participants. Need I say more? So, ladies and gentlemen, allow me to quickly introduce to you CEO of Galileo Capital. Galileo Capital is a diversified financial services business which was established over a decade ago. It employs 125 people or professionals across the country with a focus on smart investment and financial solutions for high net worth clients. I think that's about right, Theo. Theo, seeing the opportunity in crisis is tough. I know that. You know, I sit here, this whole crisis is unfolding around us, and the ability to look through the noise is very, very hard. So I'd say it's tough, but without perspectives like yours, it would be much harder. So, ladies and gentlemen, Theo from Galileo Capital, and we look forward to hearing your thoughts.
Thank you very much, and thank you for the kind words, Chris. I assume everybody can hear me, so I am just going to carry on. First of all, later this afternoon at 5 o'clock, again, we have the sake and souvenir with Netwerk24, and today's discussion point is about companies and wealth over generations. We're going to touch on wills, we're going to touch on estate planning, but specifically about how do you maintain wealth throughout generations and the principles around that. But that's at 5 o'clock on Netwerk24. Let me start, and that's why the bottle of wine is here. Let me start off by saying Bill Gates made a very interesting comment a few days ago. And he talked about the principle of true normal. What is true normal going to be? And the point of departure is we must be very careful. The old normal is not going to come back, and neither do we know what the new normal is going to be. And true normal will be when we can do business without fearing the effects of COVID-19 or it being around. And he said the absolute earliest date we will get to a true normal again, which will not be the same as the old normal, but the earliest date he can foresee that is somewhere in the middle of 2021. Now, I think if that is your point of departure, we have to appreciate that this is going to be a long haul, and South Africa will probably only peak somewhere in the third quarter of this year, somewhere between July, August, September, in that time frame, and we'll have to work around that. So true normal or a new normal or a way of doing business that COVID-19 is not a factor is going to be at the earliest middle of 2021. I think what we have to appreciate is that that can only happen, and I'm just going to emphasize that because I think we need to appreciate that. That can only happen when there is herd immunity in the population. When do we get that? Either when there's a vaccination available and more than 60% of the population is vaccinated, or when more than 60% of the population has had the virus and has a resistance to it. Because then the transmission of the virus will be below 1, and as the virus transmission drops to below 1, simply because more than 60% have had it, it'll die away. And that's the game in town at this point in time. When are we going to get there? Either by vaccination or by more than 60% of the people being immune because they had it. What we have seen in South Africa is a few things. I think from the South African politicians, we've seen the best of the good politicians. We've really seen that. In the ANC leadership, we've seen the best in the good guys. We've seen the best from Cyril Ramaphosa, the best from Zweli Mkhize, but then we've seen also the worst in the bad guys. We've seen the guys that actually believe this is a way to show power, to force your view on other people. We've seen that as well. And that is a danger sign that I'm going to come back with. So on the one side, we've seen the absolute best in the good people, but we've also seen the worst in the bad people. Now, in South Africa, the point of departure from a government point of view is based on the following logic. And I'll go through the logic and then also explains where we are. The key with the logic in South Africa is that we needed to flatten the curve simply because we cannot expect a health industry that's never ever operated at the optimal level to all of a sudden to become optimal. Our center of excellence in our health industry in South Africa is in the private sector. In some other countries, it sits in the academic sector, or it sits in a joint venture between the academic sector and the private sector. In South Africa, it's in the private sector. So we've had to buy ourselves some time to gear up in terms of the medical infrastructure. What you have to appreciate, and that's a very important point, lockdown is not a solution to anything. Lockdown doesn't solve anything. Lockdown doesn't get people all of a sudden cured. Lockdown, the virus doesn't disappear because there's a lockdown. The virus purely buys you a bit of time. That's all. The lockdown policies. Apologies. The lockdown purely buys you some time. That's all it does. So we've had that time bought now. That's why one can argue we spent a week too long in the lockdown. We should spend a week early in the lockdown. That'll be up for debate. The lockdown is going to start to loosen. We go to step 4 tomorrow, of level 4 tomorrow. Now the government's view is that they would like as much of the country as possible, as soon as possible, to get to level 3. That's kind of their strategy. We'll probably spend a week on level 4, and depending on the numbers and the growth rate of the numbers, we might go then within a week to level 3. But, and this is the big but, the whole country will not necessarily go to level 3 at the same time. There's certain hotspots at this point in time. KZN, specifically around Durban, will most likely not go to level 3. Areas in the Western Cape will most likely not go to level 3. Gauteng, there's a good chance that there's big areas in Gauteng that will not go to level 3. The point of the fact is everybody will go to level 4 simply because we need to get some economic activity going. We need to get some freedom for people to move. But from level 4 onwards, it will be very much based on region and on what we're seeing in the numbers. The government want to get the country to a level 3 because that's when they believe there's some activity going in the country. That's the background. But why were our government so very careful? We have in South Africa around 9 million people that are HIV positive. 9 million. That's by far the epicenter of the world. South Africa is the epicenter of Africa, and technically KZN is the epicenter of the world in HIV. So what we want, the South African government is incredibly concerned about this 9 million people. Now, why is that? If you look at the HIV positive person, if they're on retrovirals or not, their chance of dying from flu is between 25 times and 50 times bigger than a person that does not have HIV. If they are not on antiretrovirals, that is 50 times plus. And that is where the big concern with government lied immediately to say, let's just get some infrastructure going because no country can afford that kind of numbers. And we don't know what the numbers will be on that and how that's going to reflect. Just a few interesting points. Everybody talks about the Cuban doctors coming in. What is very interesting, Cuba has about 30,000 doctors internationally working in more than 60 countries. It has been since the 60s an export product for them is doctors in third world countries. South America, Southeast Asia, Africa. It's part and parcel of the Cuban mechanism is to outsource doctors, and they actually make money out of it. It's a money spinner for the Cuban government. Most of the salaries these doctors get paid doesn't go to them, it goes to the government. So it's part and parcel. South Africa is not unique for taking Cuban doctors. They do it worldwide, and they do have a speciality in community-based medicine. And I think that is something that we have to appreciate. The problem with our lockdown is we are starting to see that in Japan, first sounds in Germany, first sounds in, let's take Japan. Japan was in lockdown for, I think, for 3 weeks. It came out of lockdown, and on the 26th day out of lockdown, they had to start lockdown big parts of Japan again. That's what happens if this virus comes back. And we have to appreciate we're most likely in that position, where if we don't get this right, we will go back into lockdown. Germany is talking about it in regions. Austria is talking about it. That's your problem. If you do it too early, you might go back in again. Sweden is the one country that people are looking at very carefully because they took the view of a herd immunity that needs to happen. The point is that people, if the community is not resistant to this, you cannot stop it. They didn't have the strong lockdown procedure, but that's an absolute anomaly because if you look at the numbers, they're packed with this. They convinced the Swedish people to start social distancing without even having to implement it. Movie houses closed simply because nobody pitched. Big restaurant closed, nobody pitched. Sport events was cancelled, nobody wanted to come. So they had that in place on that factor. But what they are seeing is, if you look at the other Scandinavian countries, the Swedish casualty rate is factors higher than Norway or Finland or any of those countries in that area, or Denmark. So they are paying a price for that, but they believe that's the only way that you can get it, is to take an approach where you look at the high-risk people, older people, people with medical conditions, cover them, take them out of society, and get the rest back in again. They are paying a price for it. They still believe it's in line with their numbers, that the rest of the world are just behind the curve because you have to have people getting herd immunity. And in that process, they are trying to not hurt the economy as is. The US numbers is actually, anybody that believes this is like a flu, well, just look at the number. The US casualty rate is now above 60,000 people. Last year, 2018, 2019, the 12 months, which they measure their flu season in to encapsulate winter, 34,000 people died of flu in the whole of the US. More than 55,000 people died of COVID-19 just in the month of April. Annually, about 38,000 people die in car crashes in the US a year. Again, the coronavirus number was 55,000 in 1 month. They've now surpassed the number that died in the Vietnam War, and by Sunday or Monday, they would have surpassed the number that died in the Vietnam War, the Iraq War, and in Afghanistan at the level they are still growing. So there's still a massive challenge of how they're going to manage that and what they're going to do about that. In terms of the rest of the world, I think there's areas in Europe that's actually doing a lot better, but history will tell us what's going to happen in the next 2 or 3 years. Currently, worldwide, academically, there's 5 countries that are being seen as effective in this respect. North Korea, Germany, South Africa, Australia, New Zealand. Those are the countries that are viewed as getting this thing right. So from an international perspective, even Donald Trump early this morning said that the lockdown was necessary. Anybody that argues against a lockdown make a massive mistake. That numbers that were projected would have happened if they did not have a lockdown. So one must be careful what you read in terms of the lockdown. What for me is interesting is that the more conservative virologists is slowly starting to make their way back to the people that they listen to. Where there was a time that you had some popular views, 1 or 2 medical records come out, and it was different. Just on the medical scene, there's currently, if you look at the website run by the Gates Foundation, there's currently 587 clinical tests in the world in various stages. There is something like 140 per kind of treatment. South Africa is very involved in it. UCT and Stellenbosch is playing a major role in this, in the tuberculosis vaccination clinical trials, and I'll get to that just now. But there is an incredible amount, to such extent that some of the tests that came out yesterday resulted in Gilead, a pharmaceutical company, actually the medical industry requesting, or medical watchdog requesting, that the trading in the shares be suspended until they get some new tests out of the way. It's making major headlines in the world. There's one thing about that test that one needs to appreciate. It is not a blind test. Now, what does a blind test mean? A blind test is the same test protocol that's being used in South Africa for the TB test by UCT and Stellenbosch. A blind test means that half the people get something that does not have any effect of them. But, and this is where the big but is, the doctor giving them the medicine also doesn't know. So a blind test is that not only the patient doesn't know who's getting a Smartie and who's getting proper medicine that's being trialed, the doctor also doesn't know who is actually this patient, if the patient got real medicine or not. Now, the tests that are now coming out does not adhere to those rules, but it's more a test of, is there enough positives to carry on, or is there negatives that we might as well can it? My view is that if you talk to some of the people in South Africa, and UCT has got a number of studies with Stellenbosch that are very advanced in terms of planning and in terms of initial testing. I mean, the first big test at Tygerberg with this BCG or the tuberculosis vaccine is starting on Monday. They want 500 health workers, which will be a proper medical test starting on Monday at Tygerberg Hospital. What they want to show is a TB injection. When you have a TB injection, it gives you a certain viral defense mechanism, but you get it as a child and it only lasts for a short period of time, for a year or 2 years, and it does not cover all TB related strains. It does not cover them, but it covers enough for people to say, if you were to use the vaccine now on health workers, it might assist you for a year or two and give you a bit of immunity for a year or two. And that's the aim of the exercise. So the fact that the UK has had vaccinations for years for TB and they fell for this, that's not really relevant in terms of the academics. The academics say it's only for a year or two, and there is enough anecdotal evidence that there might be something in there. And that's purely anecdotal, but so those tests are running. But let me now get back to the big changes in the world, that if you look at the documents and if you look at the academic documents and if you look at some of the reports, we're starting to see probably 5 or 6 big changes starting to happen. From a business international perspective. Number one, this whole idea of, is there certain products that a country needs to manufacture itself that they cannot import? That was even driven to a point when Donald Trump said in a press conference a while ago, it is impossible that nobody in America, although they can make earplugs and they can make all other stuff, they cannot make the swab that's used to test for COVID-19. The whole of America apparently cannot manufacture that. So what we're seeing there is countries will go back and say there is certain things that you absolutely have to manufacture locally. You cannot not manufacture it locally, number one. And I think that might change the way people do business and the way business is done internationally. So that's the first point. We will find that there will be, we might move back to protected industries, industries where you say you actually have to have a manufacturing capability to manufacture X, Y, Z, and that the whole world might look at that, because I think the world was shocked in terms of where what comes from and what cannot be manufactured by your own country. That's the first element that's starting to come through. So we might go back to the 70s when certain industries were protected simply because it's a national interest to have an industry that can manufacture X, Y, Z. That's the first point. The second point is international supply chains are getting reviewed. And with that, I mean is, we have talked about it, I think, in the first or second session. Companies are looking at why is there one single area that have monopoly on manufacturing certain items. When you have a crisis, you cannot get there. So international supply chains will change, and it will probably be much more diversified, so that if you need to manufacture a ventilator, there's 3 or 4 countries that can put the ventilator together, not 1 or 2 countries where you get it from. And if that might be an Apple iPhone, or even in South, a local manufacturer said to me, he can't make bed springs because a certain fastening element in a bed, in the mattress, comes from China, from a certain area in China that's closed. So value chains. The third one is, and this is a trend that was already in process but will be accelerated, this is automation. Why automation? Automation can't get sick, can't get ill, can't take a day off. It's simpler to use proper automation. And again, that was a trend that came along that you'll probably see will accelerate and will be with us, automation in a big way. Having said that, the other trend that the world is more and more talking about is some kind of universal income grant. That means everybody in the world, or everybody in the country, gets some money every month from government. There's certain basic services that people need money for, and this whole idea that there's some elements of society that completely falls flat. The world is looking at it very actively, and it's not only the lefties that are starting to talk about something like that. In South Africa, I think there's absolutely no way that we will be able in 3 or 6 months' time to take away the additional grants that we're paying people. You cannot, if you pay somebody an extra 200 or 300 rand a month, and that is almost 20 or 25% of their income, and you take it away, it's impossible. We can't do it. So the fourth point is, as I said, universal income grants is slowly moving to a mainstream right, and I think in South Africa we're most likely going to have to end there in some other way. Then what we are seeing is, we're seeing a lot of political opportunists in this world. And I'm not talking about only in South Africa. Let's look at the Hungarian Prime Minister. For a long time, he tried to impose himself. Now he is imposing himself, to such extent that the European Union is looking at it and say, guys, but you are not meeting the minimum standard of a democracy anymore. You're kind of turning yourself into some kind of constitutional one guy running the whole place. It can't happen like that. That's not where you are going. We're seeing it in South America. We are seeing it in South Africa. If you just look at the bad guys I was talking about, all of a sudden you see a minister in a bloody Cuban peak in camouflage uniform pitching up at the press conference. I mean, where the hell did you get that? Where did that come from? You see some of the comments last night in the press conference, it looked like the Taliban. The way that they make rules and regulations, as if everybody must fall into place. So you are seeing the guys that want power trying to grab it at this point. And we will have to find a way as a community and as a society to, once this is done, to move that needle back towards civil liberties, freedom to choose, and governments needs to adhere to the court process and not to what they think is good or not. The sixth point that we need to, that is going to come, is the way that the world views your right to a standard medical treatment or medical advice or medical support of some sort. It is going to change. And things like the national health insurance, I think after this will be a given. It's just how do you implement? Because this shows you there's a need, there's an element of kind of medical services required that can service more people at a broader base. And I think we're not going to get away from that. That will be part and parcel of the future that we will go into. So that's a few basic points. Then, just from a pure business point of view, there's a very interesting document by the Boston Consulting Group that they talked about if they look at the previous crisis, and the big one they could get to was the 2008 financial crisis. And I must just say that South Africa kind of dodged that bullet. Remember, in the rest of the world, banks technically had to ask for government money to stay afloat. I mean, big banks were bought up by government where the government would end 60, 70, 80% shareholding just to keep the bank afloat. We didn't have that. So we kind of dodged that. None of our big banks was in real trouble. So we didn't experience that the way that that was experienced. And what the Boston Consulting Group did is they went to the biggest companies that they could analyze their strategy. And they had a look and they say, okay, the companies that really survived, what did they do? First of all, and I'm going to split this discussion in two. First of all, they said, but let's look at how the stages in which something like this develops and at what stage what needs to be done. The first stage is almost the stage of the turbulence. And that's kind of where we are now. So as a first stage, you have to measure and manage the turbulence that you're in now. And that's where we are now. So from a company point of view, manage the turbulence, get it stabilized. So try to get your company stabilized, try to get your turbulence stabilized, and then decide what you're going to do going forward, and then accelerate on that. But if they then break it down to the companies that were very successful, there's 5 specific steps that they highlighted through various management analysis. The first one is the companies that did better in the end was acting much more proactive. With that, the companies that acted reactively, that waited for things to happen, ended up worse than the companies that was proactively looking at the challenges and acting proactively. Secondly, they use a term that's quite interesting. They use a term increasing the vitality of the company. And with that, if you look through the documents, what they mean by that is you have to be more creative. You have to think forward. You have to act more deliberately. You have to almost have more energy in the company and make sure that the people are on the front foot. The third thing is the companies that did better was those that stick very clear to their vision. They had a clear vision and they stuck to that vision. They didn't get sidetracked. They didn't get sidelined. They reviewed heavily what their vision was and they stuck to that vision. Then you have to have a kind of built-in resilience. You have to review to what extent you can take volatility or risk. And then the other point is, which I think everybody will have to do at this point in time, is use this opportunity to streamline your business. That means to seriously look at what elements of your business is key and what elements you have to focus on to what extent. So those were the 5 kind of elements that they came up with. Now, if I look at the questions that came through and the questions that were asked, and I'm going to quickly run through the questions. The question about the SAA is, that's a very difficult one. And the aim there is government realizes that you can't have a worse time than now to put 500 breadwinners on the street. It is not the time to add to that number now. They are already struggling with the people that is unemployed as we talk. So what they're trying to do, it seems for me, is if you look at the Swiss Air solution, we're going to end up with a smaller carrier, limited routes, and a much more reduced number of what we are doing now. So it will probably be a carrier that will fly to Cape Town, Cape Town, Joburg route, and probably a few international routes, but that's about it. It will be a much, much smaller carrier than we have now, but there will be a carrier. And that's, unfortunately, that's almost a vanity project. It's almost like the fact that the National Party owned the airline, the ANC must own the airline. That's as far as the logic goes. It's absolutely nuts and it's stupid. So that is kind of where it seems where the current logic is. Unfortunately, with SA Express, it's much smaller, but it's hopelessly insolvent. I mean, It should have been liquidated in February when it started to miss payments, but it's hopelessly insolvent. It hasn't paid salaries for 2 months, so I don't think there's any chance there. Again, the negative aspect of that is routes like Kimberley, Hoedspruit, Gaborone, they played a role in that route. In terms of the South African economy, I see Treasury this afternoon issued a document that they say, but they believe between 2.7 million and 7 million people will lose their jobs. Now, just think about that for a minute. The total South African people with jobs, the employed in South Africa, is about 16.5 million people. Now, remember, we're about 58 million people. So 16.5 million people in South Africa has got jobs. The unemployment rate, if you add both the people that are actively looking for a job, which is about 7.5, and you will around about 7, just a bit more than 7. And if you add the 3 million people that are just plain gut full of looking for a job, that's about 10 million. So 10 million people that technically wants a job, can't get a job, 16.5 million people with jobs, and there's in the employment market another 12 million people that are kind of lost to the system. They're not counted as employed, they're not counted as unemployed. They made up of from the people that, the unfortunate people for 20 years that did not finish school. There's about 12 million of them. So if you have 16.5 million people employed and Treasury tells you their best case scenario is 2.7 million people will lose jobs, the worst case scenario is 7 million people, guesstimate is probably in the middle. And one will have to look very carefully what the social implications of that would be over the long term, and to what extent one can absorb them back into the economy. The question about economic growth, I mean, the guesstimate there is probably, I don't know, last numbers from the Reserve Bank and Treasury is negative 6.5%. I think it's a thumbs up. It could be negative 6% or negative 10%. It is incredibly difficult. It will be a major negative number. Employment numbers will go up probably between 3, 4, 5 million in terms of the Treasury numbers. One of the bigger concerns for the government is that once we out of this, or as we get out of this, personal and company balance sheets will have taken a massive knock. Companies and personal income statements would have taken a massive knock. And those knocks, one needs to decide how we're going to get out of this after you've taken those knocks. So economic growth going to be down. The question then that came is about where does that leave us with things like inflation and interest rates. Now, the problem with our economy lies both in the demand and the supply side. So therefore, this is not a shock to supply or a shock to demand. It's both demand and supply. There's simply no consumers out there. There's nobody going out there. There's no business activity. Doesn't help to make hamburgers if nobody can buy a hamburger. Neither does it help to manufacture steel if you can't get staff in there. So it's both on the supply and demand side, which is not really something we've had in the past. It's usually either on the supply side there's a problem or on the demand side there's a problem. This is both of them. So what government is trying to do is, first of all, their debt is going through the roof. And unfortunately, I mean, nobody notes it, but the US debt is also starting to go to extreme levels. And their total debt in the US is currently $24.5 trillion. Their packages, the assisted packages was, the first round was like 2 billion. It's ramping up. That money will be borrowed. So the US number, depending how you look at it, could come to 120 or 130% of GDP. But just remember, there's various numbers there that one has to look at, but it is getting into incredible high numbers. South Africa debt to GDP, it's anybody's guess, but we will not be close to the numbers in the budget. And our total shortfall this year that we'll have to fund will be factors more than we had in the budget. And I think that's why Theo Mboweni said that he will, in due course, probably sooner rather than later, have to table a new budget. And we'll have to see what's in that budget. What we do know is it will be a shocking set of numbers from a tax income point of view, from an expenditure point of view, from a shortfall point of view. It will just be a shocking set of results. What we are seeing in terms of the Reserve Bank is that they are starting to almost print money, for lack of a better word, and the structure of 200 billion assisting the local banking sector, that's the kind of things that will get us going. So we will find more liquidity into the system. And I think the question is, how long will it take for that liquidity to come through into higher inflation and higher interest rates? The point is, if you look at the quantitative easing in the US post-2008 and in Europe post-2008 and in Japan since the early 90s, it can take very long and it cannot happen to the extent that one thinks it's going to happen. My view is that if we get our economy back going again, there is certainly a risk for inflation sometimes in about 18 months to 2 years' time. I cannot see it beforehand. And then it will depend on to what extent we had to put additional money into the system and to what extent the economy is going, and can we mop up that money that we put into the system. The rest of the world seems to think they can. It was not really needed. At this point in time, neither in Europe. Europe and America more had a problem with low inflation than with high inflation. So yes, it can happen. I see most inflation predictions, unfortunately, is modeled around information that's currently on the table and not this additional liquidity that will be created. To model that is very difficult, but there's certainly a chance if we get to true normal in the middle of next year, we start to get the economy going again. And if there's then excess liquidity, we might get a bit of inflation. My view actually is that South Africa would like some inflation. Inflation would have a way as a developing economy to assist with our total debt and to assist some of the local exporters and importers just to get themselves rebalanced again. So I wouldn't be surprised if I was the governor of the Reserve Bank to say, guys, 3 to 6 is my target range. I'm aiming for 4.5. I might be aiming for closer to 6 just to get the economy going. I think things like the Reserve Bank mandate might come into play. Remember, the mandate of the Federal Reserve in America is, first of all, employment, full employment. That's the first point in the mandate. So if they report how successful or not successful they were, they first talk about what is the unemployment rate. In South Africa, we're talking about inflation. And perhaps you'll see a move closer towards to say, guys, in order to get out of this, we might want to have some inflation in the system. And I wouldn't be surprised if that focus moves in line with, let's say, the US focus to say the Reserve Bank's primary measurement tool is inflation, is employment, then inflation. We might get closer to some of those elements, which is a massive departure from where we are now. But I do think we're in a very uncertain environment. Roelf, I think from my side, that's a bit of the background and synopsis.
Yeah, Theo, thank you. I think you've definitely given us more, a bit of than a background. You've given us a very comprehensive overview, and thank you for that. Is there any questions from our participants?
Roelf, I've got a quick question just with Theo, just on interest rates and over the next couple of years.
Yeah, Matthew, just state your name and where you're from.
Sorry, Matthew Dundas, CEO, Austin Dundas Properties. Theo, you mentioned briefly your thoughts on inflation and interest rates, but I don't think you touched on the interest rate portion of that.
I'll get to that. All right, Matthew, thank you very much. I do believe that we might get another 3 or 4 25 basis point cuts if this economy does what the Reserve Bank and the Treasury thinks is going to do. If we're going to have between 2.7 million and 7 million, or 2.5 million and 7 million people unemployed, and the economy contracting by 10%, I think the Reserve Bank has stated that another 325 basis point cuts is not out of the question. So I think that's a fair assumption that we will get that. That will probably be over the next 18 months or so. I don't think we can go lower than that. I think that's about where we will end. And then the question is rather, 3, 4, 5 years down the line, what are we going to do with interest rates as a tool to get the economy going and to keep momentum going? I think we are going to be surprised at the low level and slow increase of interest rates, because although I do think we're going to get some inflation, I think the Reserve Bank will allow inflation to creep up to the higher level of the band. In the past, they were very strong on keeping it at 4.5% in the middle of the band. I think you will find that they will loosen it to the higher end of the band. So although I do think we will see inflation moving up probably 2 odd years from now, I think initially it will be gradual. I think it will be very, very, very pedantic moving it up. Your risk is further out. And that risk is if there's massive excess liquidity in the market and we start to see the inflation rate going 6, 7 or 8%. My view is I think then you will find the Reserve Bank might move back to where we were. There's, however, 2 major elements here that's very difficult to predict. The first one is around the trading of the value of the rand 3, 4 years out. And the second one is obviously South Africa's public finances is in a terrible situation. We were in a terrible situation coming into this. This whole COVID thing we couldn't have picked a worse time to go into this. After 9 years of being looted in terms of public infrastructure, in terms of institutions, and in terms of public funding, we couldn't have come at a worse time. So we are not positioned and geared for this at all. So the impact that very difficult for me to gauge is what will the rand do in the longer term, given the fact that we are now fair and square junk, but so is half the rest of the world. And those that are not junk, it's just because there's more confidence in the economy than anything else. That could lead to upward movement in interest rates. So my view is that we'll probably go down for the next 18 months or so, but then we will start interest rates to climb up. I don't think it'll be as aggressive, trying to put down inflation as it could be. It will more be a case of getting the South African economy going again. So I don't see that we will reach the levels we were in January. We'll probably or even before that, we will not reach that levels, in my view, for 3 to 5 years to come. Post that, it is the more further out you are, the more difficult it is to predict. Immediate short-term future, I don't think we'll see interest rates jumping up again.
Hi, Roelf. This is Nangamso Mangai. I am Principal Investment Officer at the Big End Group. Theo, I listening to what you have said, and thank you very much for that, and also sort of following what has been happening around, this time really highlighting the inequalities in our economy and in our social classes. What is your opinion? I mean, you speak of the sort of getting the gears up and running again from a business perspective, but how do you believe that business as a sector can try and bridge those socioeconomic gaps that we have seen, obviously given the fact that we are getting individuals from the same labor market that is showing these disparities? Do you think business has a larger role to play than they have in the past? And how do you see us bridging that? Thanks.
Thank you. That's a very interesting question. I think this is highlighted in everybody's mind, the big disparities there are in our community, and the fact that however your view was in the past, this is emphasized to everybody, these disparities and where they are. And therefore, I think things like a universal income grant all of a sudden will become almost mainstream discussions. Things like national health insurance will almost become mainstream discussions. The point is what the government will realize, and I think that's where business needs to step up to the plate. The fact that you have a non-functioning or under-functioning government means that the under-functioning government without any money available. That means that government will have to rely on business for the future. And I actually kind of agree that business will take a kind of a different view on how we go forward. So my view is that there's one of the priorities of government in terms of, let's say, one of the fears of government is that there's an absolute breakdown in the social compact between government and the man in the street. That there's a breakdown in that compact, and that compact is based on the fact that government is working towards bettering the lives of all South Africans, and I think government is scared of that compact to break down. Now that compact comes under pressure when there's unemployment, when there's poverty, when there's lack of social services. That compact can break down. For business, it is very important that there is a kind of a compact in place. Whoever runs that compact from a government point of view, from a political party point of view, that's not so important as to that compact needs to come in place. I am very enlightened and happy and delighted with the way that business stepped up to assist in terms of the solidarity fund, the amount of money that's going in there, the various options in there. So the short answer is we are going to get in a different world. People in future will talk about the pre-COVID world and the post-COVID world, or the pre-corona world and the post-corona world. Just like what you've seen after the First World War and after the Spanish flu, you had the roaring 20s. I believe that you're going to see a different world coming out of this after 2 or 3 years. This is going to be a battle for 2 or 3 years. And that world will be closer to, if you go and read some of the documents of Theodore Roosevelt when he talked about the square deal. At that point in time, it was 100 to 120 years ago, America was in a position where on the one hand, you had the big Rothschild monopoly, you had workers with no rights, and you had consumers absolutely at the beggar, at nothing that they could look forward to. And he came in what he called a square deal. And his square deal included limiting big consortiums, limiting big businesses, start to look at poor social benefits, start to look at the first kind of benefits for the man in the street, made sure the consumer had a fair deal. So he called it a square deal, and he actually won the US presidential election based on his square deal. I think South Africa will need to wake up and say, what is a square deal? And I think it's in business interest to have the square deal. It's in the man in the street's interest to get the square deal, and in the consumer's interest to have a square deal. So I think we're going to move towards a kind of a what is South Africa's square deal, and it'll be a new deal. It will have to change. So my view is everybody will unfortunately or fortunately cannot not take part in this new world. And I'm actually incredibly excited. It's going to be 12 or 18 or 24 months of very difficult, but we're going to get out of this looking at the world differently. Perhaps you won't buy that Gucci watch and rather spend more time on your staff, or perhaps you wouldn't do that and rather give more to charity. I think we're going to see massive changes in that. To predict them is very difficult, but key point is we are going to see a different way we are doing business, both businesses way, but also government will realize that they run out of money, they run out of way. If they want to keep the social compact going, they'll have to convince business to take part in this.
Thank you.
Any other questions?
I've got a question, Theo VanderMerwe from the Marathon Group. I just want to probably hear your view on it. To what extent do you think COVID-19 has been a springboard for unity across the divides in South Africa and for a better aligned future for all of us?
Look, I think that question is what the question that that we kind of, everybody that is proudly South African, positive South African and live here would like to have a great positive answer to that question. I do think it showed us that COVID does not look at your passport or your bank balance or where you stay or what clothes you wear. That's not relevant to it. we're all in the same boat. And I think we are going to realize that we need to get, remember this, if you look at the heyday of American growth, and why I keep on referring back to America in that respect is, America is roughly 5% of the world's population and does almost 25% of the world's GDP. So you need to look at a few elements there. What was important is America had its best growth rate for long years of time when the gap between the worker and the top paid executive in a company was almost 80% less than now. When that ratio was in the ratio of 20, 30, 40, then America had its best decade of growth. When that ratio started to go to 100, 200, and 300, it actually broke down. So I think there's a sanity check in there. My view is that this just showed that, and I must say, I'm incredibly impressed up to now as to how South Africans have almost reacted, both informally and formally, trying to get this out over this thing. And I think that camaraderie, we've shown it at the Rugby World Cup. We've shown it from time to time. If we play this right, we might use this as a galvanizing factor. And there, I think we've got probably the two best ministers or three best ministers we've had. I'm excluding President Mandela. That was a different era. But from a president operating, I think Cyril Ramaphosa is way ahead in terms of grasping the problem, in terms of trying to get it inclusive, and in terms of talking to the society out there. He just needs to make sure he keeps ahead of the curve. Number one. Number two, Dr. Zweli Mkhize, I think we can have lucky to have him at this point now with Professor Karim, which I think is an incredible team to create the certainty. And then I'm a big supporter of Tito Mboweni simply because I think he grasps the real problem that you have to move away from ideological populism into what can work for South Africa and what can't work, and look at the reality. So I am the next 18 months, 2 years is going to be tough, but I do think people's ways of doing business will change. And I come back to the point, things like the universal income grant, medical services for all, those kind of things is going to become mainstream. But yes, if we can get through this and we get through this with limited damage, and I don't know what limited damage means. I do think there's a good chance that we will look back at this and say, yes, we got it right. We had the right leadership, right policy. So let's get a fairer country for everybody.
Thanks, Theo. I share your views.
Nico de Waal, can I ask you to do the necessary?
Apologies, Roelf. Thank you very much. I just unmuted there. Now, thank you, Roelf. You've asked me to just briefly thank Theo, and that's an easy task. I really picked up on this last portion of the conversation about Alvain's question around, could this be a springboard for unity? And I think we all hope so. So my thank you is going to go like this. In solidarity with more of our compatriots in the country, I'm going to say, Nkosi, Ngiyabonga, Kia Leboa, thank you, dankie Theo. I think what you're doing here, and I don't know how much red wine Roelf and George has been promising you, but what you're doing is in the spirit of helping all of us. And I really do think that these kind of efforts will go a long way towards getting this unity going in the country. And we are absolutely thankful for your time today. This is probably the fourth or the fifth session. And yeah, just want to say thank you very much, Theo. And we're looking forward to your insights, hopefully in weeks to come still.
Thank you very much. Baie dankie, julle.
Yeah, Nico,
all the best.
Thank you very much.
Good.
All right, then we talk again sometime next week. Roelf, all the best to everybody, and enjoy tomorrow. At least I think everybody will be out on the roads between 6 and 9.
Without a doubt.
Thanks, guys.
Thank
Cheers,
you for
guys. Bye-bye.
participating. We'll see you next week.
Thank you.
Everybody.
Bye.
Thank you. Bye bye. Bye bye.